Well, good morning, good evening, good afternoon, folks, wherever you happen to be. My name is Carmen Mazzara, and I serve as Executive Director of the Coalition for American Public Diplomacy and Leadership, or since that is quite a mouthful, as we generally call it, CAPDL. CAPDL brings together all of the worldwide voices of the Bridge USA community, international recruiting agents, alumni, sponsors, hosts, families, chambers of commerce, and all the other parts that make this program the powerful tool that it is to help strengthen and expand the great work that you all do with education, best practices sharing, like we're going to do today, and storytelling. Throughout the year, we develop lots of tools and resources to hopefully make your work stronger and more effective, as well as convene conversations like this to make sure that we all have great information in support of Bridge USA participants, as well as our host organizations. Throughout this session, we're going to have a great chance to learn some things about how you can best serve Bridge USA participants as they get their US taxes ready. And our wonderful speaker, Anna Fitzpatrick from Capital member Sprintax, is going to have lots of wisdom to share with you. She will invite you to put questions and comments and other thoughts in the chat. If you have any technical issues, please feel free to send me a direct message through the chat as well. This is being recorded and will be available on the Capital YouTube page after we're done. And Capital members, as always, you will have access to a quick summary of the key points after we're done through the member portal. If you aren't sure whether or not your organization is connected to Capital, please reach out and let me know. We absolutely want to welcome as many different parts of the community together to really continue to help Bridge USA grow and get stronger. So with that, I am delighted to turn the floor over to Anna. Again, if you have any questions about the technical side of things, let me know. And otherwise, we're going to have some great wisdom here to share with you in a moment. So Anna, please.
Great. Thanks, Carmen. And to echo what Carmen said, thanks everyone for joining. Really appreciate everyone's time. We're at prime time to be thinking and talking about taxes. We're just over a month away from the US tax filing deadline. So whether you're a host, whether you're an agent, whether you're a sponsor or another type of organization who might have connections with non-residents or J1s as a whole, you may be fielding some questions coming from them regarding their tax filing requirements. So good opportunity to run through some non-resident tax information for Bridge USA participants and mainly focusing on, information for hosts, sponsors, agents, and other organizations. My name is Anna Fitzpatrick. I am a business development manager at Sprintax. I'm coming into my seventh tax season, which feels crazy to say. I feel like I finished college yesterday. But also I've been a J1 myself twice, so understand some of the anxieties that come with tax season and making sure that you're doing things correctly, and helping to break down the some of the fear that comes with tax filing for J1s. Then just before we start, some general housekeeping, as Carmen mentioned, feel free to use the chat. Happy to address questions towards the end of the session. Any feedback you have is also always appreciated. As Carmen mentioned as well, presentation is being recorded, so you'll be able to watch it back as well. Then, because it's tax we're talking about, always have to start off with some type of a disclaimer. This presentation is aiming to give everyone a general understanding of tax as it applies to J1 visa holders in the US. So each J1 is treated slightly differently for tax purposes, depending on the visa type they're on, depending on the country that they're from, for example. So it is important to keep in mind that they have their own unique tax position and are responsible for their own tax determination and tax compliance. Then looking at what I'll try to cover today, an overview of tax for non-residents on J1 visas, looking at things like residency for tax purposes, who needs to file a tax return, for example. Understanding guidance around employment and receiving US income in the US, so what taxes they should be paying versus maybe what taxes they shouldn't be paying. I'll go fairly high level into tax changes and other important considerations. So primarily looking at the One Big Beautiful Bill Act that came into effect late last year. Some factors that would impact J1s there and other international individuals. Implications of not filing or misfiling, massively important for J1s in particular. We see J1s filing incorrectly a lot more than other visa types. So kind of breaking down that for everyone. And then Q&A towards the end of the session as well. Generally, a good place to start is around important dates when we're looking at the tax filing season. And when we're looking at the 2025 tax filing season, we're looking back on the 2025 tax year. So we're looking at the period of January 1st to December 31st, 2025. And we're looking back on that period to any income that they earned, any taxes that were withheld on that income, any presence that they had in the US. And ultimately, we're looking to see if they might have over or perhaps underpaid tax to the IRS or to the state tax authorities. So, as I mentioned, we're just over a month away from the tax filing deadline. April 15th of 2026 will be the deadline for them to file their taxes as well as pay any taxes that they might owe to the tax authorities. Residency for tax purposes, then, is definitely a concept that can tend to confuse a lot of J1s in the US. So, the first thing that we mentioned to them, and that is important to mention, is that it is independent of their visa or immigration status. So, generally, J1s are considered non-residents for tax purposes, but it's for a set period of time. So, for example, J1 interns, trainees, summer work travels, camp counselors, au pairs, teachers, researchers are considered non-residents for 2 out of the last 6 calendar years in the US preceding the current year. And here the IRS are concerned with a calendar year. So, for example, if a J1 entered into the US for the winter season on December 20th of 2025, 2025 would count as one calendar year of non-resident status used, even though they were only here for, a week or 2 week period. Then, as a non-resident, they are treated and taxed differently to that of their US citizen or resident colleagues. Some elements I'll touch on in a little bit in terms of, taxes that they should be paying. Then, if they've been in the US for longer than that 2 year period, the IRS use a residency test called the substantial presence test to determine their tax residency. And essentially, this looks at a calculation of their days of presence over the last 3 years to figure out, are they a resident or are they a non-resident for tax purposes? And it takes all of the days of presence in the US for the current year, a third of days of presence in the year before the current year, and a sixth of days of presence in the year before that. And if that totals to over 183 days, then they would be deemed a resident for tax purposes. And towards the end of the session, I'll run through some of the Sprint tax solutions that we have, but on all of our systems, we do have a residency step to determine their tax residency for them. This is just a useful residency summary table then with some of the common visa types, as well as the number of years they'd be exempt from the substantial presence test or the number of years of non-resident status that they would have, as well as some details on FICA tax exemption, which I'll go through shortly as well. So you'll see here, like if you had a J1 student, they have 5 calendar years of non-resident status versus a J1 summer work travel gets 2 out of the last 6 years. The big question then is who actually needs to file a tax return. So most, well, not most, but a lot of J1s in the US, they may have never had to file a tax return in their home country. So they might think, like, I'm here as a J1, I'm not from this country. I don't think I need to file taxes. So it can be very new to them. The first thing to mention is that everyone needs to do something and has some type of filing obligation. The minimum is generally going to be Form 8843, and this form needs to be filed by all individuals who are present on US soil as a non-resident for tax purposes on an F, J, M, or Q visa status during the tax year. It needs to be filed even if they didn't earn any income, but also if they did, it'll be filed alongside their federal tax return. So that can sometimes slip through the cracks a little bit, so just to make sure that your J1s are aware of that. Then in most cases, J1s will likely be receiving some form of taxable income, whether that's wages, a stipend, compensation for other types of personal services, prizes, awards, or otherwise. And as there is no personal exemption amount for non-residents, if they earn anything over $0 of taxable US sourced income, that is going to trigger a federal filing requirement, which is the 1040 NOR. So we do get a lot of questions saying, I only earned $3,000 or I only earned $2,000. Do I still need to file? And the answer is yes, because there is no personal exemption amount for non-residents anymore. Then just looking, like, this isn't an inclusive list fully, but some of the income types that they might receive. So most commonly for J1s, it's going to be your traditional wages or employment earnings. They could have some form like of an investment account, for example, maybe people who are here more so on like intern or trainee or slightly longer term visas if they set up US investment accounts. If they have a taxable scholarship. So again, might not be relevant to some J1 categories, but generally if a scholarship covers like tuition and tuition related expenses, it's generally non-taxable and non-reportable. But if it covers anything outside that, it is generally taxable and reportable on the return. Another common label we see for types of payments that J1s receive is stipend. And this can definitely cause a lot of confusion because sometimes employers think I'm paying them a stipend towards their living expenses. It's non-taxable, non-reportable. And that's not actually the case. It is taxable and reportable. Um, it's if it's given in return for performing some level of services, it's actually treated and taxed as like wages income and taxed and reported on a W-2. Whereas if it's more so they'll still receive it. It's not dependent on them performing services. It's non-compensatory. That's actually almost reported like a scholarship, which is what we would call income code 16 and reported on a 1042S. So I actually got an email yesterday about stipends where a host thought that they didn't need to withhold tax on that. So just to kind of debunk that slightly. And then other types of income, this could be a whole multitude of things, but they took part in a focus group and received a gift card or sold art or design works, for example. So it is important for them to look at all of the potential sources of income that they receive during the tax year and their filing requirements as a result of receiving that income. They're also going to want to know what income is not taxable or not reportable as a non-resident. So I've a couple of examples listed here. The first is money transferred from parents and relatives overseas, for example, to assist them with the cost of living in the US. It's generally going to be non-taxable, non-reportable for non-residents. Or if they earned income in their home country. So maybe they had a job before moving to the US and they received their final payslip, or they had a rental property in their home country and they received rental income from that, or they had an investment account in their home country. So the thing with non-residents is they're generally taxed on and required to report their US sourced income. So if they receive foreign sourced income, it's generally going to be non-taxable, non-reportable for non-residents. And then the last one, interest on their regular savings account. Although this may be a pretty small amount, it also shouldn't trigger a filing requirement for non-residents. Then this is a very important slide on some of the income documents they may receive to report the income they've received during the tax year. So the W-2 and 1042S are generally the most common, W-2 being the most common for J1s, and it's going to report wages, salary, employment earnings that they earned during the tax year, as well as the taxes that were withheld on that income. And generally, the deadline for employers to issue that form and provide it to the individual would have been by January 31st of 2026. The 1042S is another common form for non-residents as a whole. So it typically reports other types of income, like not that don't go on a W-2 basically. So could be taxable scholarships, non-compensatory stipends, tax-free exempt income, royalty payments, prizes, or awards, for example. And the deadline for institutions to issue those forms, if they have a filing requirement, and to provide them to the individual would be by March 15th of 2026. 1099s should be less common because they're generally for residents or US citizens, but we do see a lot of institutions issuing 1099s where they might just put J1s through the same kind of payment procedure and document procedure as they do their US citizens and residents. So if they get a 1099, it could be for like rental income, investment income, or other types of income they receive, and they'll still need to report that if they receive it. Then just the note at the end there is related to au pairs. So au pair host families are not required to withhold tax at source and issue a W-2. We see a very small amount of au pairs getting W-2s where like maybe the host family has an accountant or something like that. for the most part, they'll just get the payments and then they'll need to report those payments on their tax return and generally pay taxes at that point. And then if they have one or multiple income documents, they'll report them all on their one tax return. Then, depending on the type of J category they're coming over on, they may bring like a J2 spouse or a J2 dependents. And in terms of joint filing, there are no joint returns available for non-residents. If they're a non-resident and they're married to another non-resident, or they have non-resident dependents, they would need to file separately. The obligations then remain much of what we've discussed up to this point. The minimum is generally going to be the 8843. If they both earned income, they need to file the 1040 NR. And then importantly, each dependent should mail their forms in separate envelopes. Where that changes then is if a non-resident is married to a resident, they can actually elect to file jointly on their resident spouse's tax return. It's just if it's two non-residents that there's no joint returns options there. Up to this point then, when I've talked about things like residency for tax purposes and who needs to file a tax return, that has been on the federal side. When it comes to the state tax side, as we largely all know, states have their own individual state tax rules and state residency rules. Some will say you only need to file if they earn over a certain threshold. Others will say they need to file from the very first dollar. Others don't have state taxes at all. It also depends on a number of factors, including things like the type of compensation that they're receiving, the type of visit that they're having in the US, whether it's temporary or permanent, and even down to the type of accommodation that they held during the time in that state. So it can be difficult to answer when we're on webinars with participants, like, do I need to file for this state or do I need to file for that state? Like, we kind of need an overview of all of their information. But on our Sprint Tax return system, we do have the option to determine if they need to file a state return as well as prepare state returns for them. And we do get questions a lot as well. If they lived and worked in multiple states, do they need to file two state tax returns? Again, that is like case by case dependent and state by state dependent, but we'd be able to determine that on our side if they did need assistance. Another common one or issue or question we see from J1s and like agents, sponsors, and hosts is more for maybe short-term J1 visa holders who came to the US, went through every effort to try and get their social security number, maybe had to leave early or maybe just didn't get the social and had to leave the US. And they're wondering, like, how do I file now without a social security number? So they can apply for what's called an ITIN, an individual taxpayer identification number, alongside their federal tax return. So that means that then they can get their return processed as well as the ITIN application processed at the same time. The application form is Form W7, and that can be prepared and filed by them. And then they need to also get their passport certified. Like, there is the option to send in their like real passport, which we would obviously never advise sending that to the tax authorities. So they can send a certified copy of their passport, which their options for certifying that would be, if they're in the US, a certified acceptance agent or a local IRS official. Or if they're outside the US, the governmental department that issued the identification document or the US embassy or consulate. So that's essentially one way that they can still file their tax return if they weren't able to get their social in before they left the US. Then moving into employment and receiving US income during the tax year. So it can be a common misconception maybe for some J1s that they think, I'm only here for 3 months, I shouldn't be paying taxes. And unfortunately, that's not the case. The IRS does require federal tax withholding on all US source payments being made to non-resident aliens. So in the case of their wages, they're generally going to be taxed at graduated rates. The more income they earned, the higher the tax that should be withheld. So I've included the graduated tax brackets here for 2026, and they may also have state tax filing requirements depending on the state and depending on their circumstances, and the employer or the host is required to withhold the appropriate taxes from their pay and deposit that to the relevant tax authorities. This is just some additional, I wouldn't call it light reading when it comes to the IRS, but some additional reading available on the IRS website specific to things like non-resident tax withholding and also supplemental W4 instructions for non-resident aliens. So there is an important consideration here that non-residents are not eligible for the standard deduction unless they're an Indian student, trainee, or business apprentice. So there are instructions on that IRS Notice 1392 where essentially an additional amount needs to be calculated in terms of the withholding to accommodate for removing the standard deduction. So that has additional information and instructions depending on the income that they're level that they're earning, like the additional amount that needs to be withheld to compensate for the removal of the standard deduction. And then also another IRS publication, Form 15T. And I'm sure, Carmen, you'd be able to share the slides with them so we can get these accessible links as well. Then other employment considerations, I mentioned this in the last slide, but most non-residents cannot use the standard deduction. So outside of Indian students, trainees, and business apprentices. So I'll touch on towards the end of the session some like stats that we see on our side in terms of the visa types that tend to owe the most. Probably see summer work travels and camp counselors owing more than like an intern or trainee. The biggest issue tends to be that employers are letting them claim the standard deduction, which they're not entitled to. So then when they're filing their tax return, they end up owing and having to pay that back. So definitely important to make sure that you are treating and taxing your non-resident employees differently to that of your US citizens and resident colleagues. So the personal exemption amount is zero. They're taxed from the very first dollar. And we might have some hosts or agents or sponsors that were familiar with the fact that there was a personal exemption amount back in 2017. It was $4,050. The Tax Cuts and Jobs Act during the first Trump administration removed that, and that has been made permanent now. So there is zero personal exemption and they're taxed from the very first dollar. Then credits for dependents, we do get asked this as well. It's in very limited cases by eligible non-residents for a qualifying child, so including Canada, Mexico, South Korea, and Indian students, trainees, and business apprentices. So very limited cases that dependents can be claimed. And you'll kind of see a common theme that non-residents tend to get the short straw when it comes to things that they can claim on their tax return. One tax, though, that they generally shouldn't be paying as a non-resident on a J1 visa is FICA taxes. In the eyes of the IRS, they're not going to be in the US long enough to enjoy the benefits of Social Security and Medicare. And as a result, they shouldn't be paying FICA if they're a non-resident on a J1 visa. However, it's not a blanket rule. If they were on a H1B or a J2 or a TN visa, they would be subject to FICA taxes from the first day of their employment. Also, if they become a tax resident, they are subject to FICA taxes. So it's not a blanket rule for all J1s. It's only if they're a J1 on a non-resident visa or on a non-resident for tax purposes status. So if they have that withheld incorrectly, there are opportunities to claim it back. The first is to reach out to the employer and request the FICA refund from them. And if the employer refuses or doesn't respond to the employee, they can apply for it directly with the IRS using Form 843 and 8316. What I will say is wait times with the IRS for FICA refunds are very significant. I've had individuals reaching out to me waiting like 8+ months and still not having an update on their FICA refund. So mainly making sure that you're not taxing them and withholding this when you shouldn't be. And if you do withhold it incorrectly, trying to figure out how to, provide that back to them. If you need to amend quarterly or your annual tax return, for example, it would save them hassle and also save you the wait times trying to get that back from the IRS. Multiple jobs then can come into it a lot for J1s. So tax rates may increase as some income rises. So therefore, some adjustments to the withholding must be made to avoid owing additional tax and potentially penalties on the annual tax return. So the withholding should be generally increased when the person holds more than one job at a time, or if the person has income sources from other jobs, other than jobs or self-employment that is not subject to withholding. So sometimes employees don't tell both employers that they have multiple jobs. So each employer is thinking, okay, I'm taxing this person based only on the wages that I'm paying them, whereas they could actually fall into a higher tax bracket if they have multiple jobs. So they may need to look at, how to prepare and populate their W-4 based on having multiple jobs. Then tax changes and important considerations then. This is the One Big Beautiful Bill Act. I'm going to go fairly high level through it, but some of the impacts that it will have or will continue to have on international individuals is tip income is non-taxable up to $25,000. There's specific rules set around that based on like the type of occupation that they have, for example. Similarly, on overtime being non-taxable up to $12,500. The SALT deduction has increased to $40,000 for 2025. The standard deduction level is now made permanent. And as I mentioned, that's for tax residents or students, trainees, and business apprentices from India. There is a new worksheet for Form W4. Then it permanently reinstates above the line charitable contributions for non-itemizing filers. And then a big one that will likely cause some impacts is if they're sending money back home that they've earned in the US. So there is a 1% tax on remittances. So that's transfers by cash, cashier's checks, or money order. There will be a 1% tax on money that they might be sending back home. Then moving on to the implications of misfiling or not filing. So if they forgot to file, if they didn't realize they had to do it, but they need to catch up and backfile, they can catch up and backfile at any stage, and we would always recommend that they do so as soon as they can. Also, if they're due a tax refund in the last 3 years, the IRS are happy to issue that to them as well. Then if they misfiled, so if they filed using a resident software, for example, like TurboTax, rather than filing a non-resident return. So if they're a non-resident, they should be filing Form 1040 or if they're a resident, they should be filing Form 1040. And TurboTax and other softwares on the resident side can't help with the 1040 or. So if they do file that incorrectly, they would need to file an amended return for all incorrect years using Form 1040X, the amended US individual income tax return. Then moving on to the implications of not filing or misfiling. We put a lot of emphasis on this in our webinars with J1 participants specifically. As they're aware, they are required to comply with all US laws, including that of the IRS on filing tax forms. Being compliant is part of maintaining their visa status in the US. One that I've highlighted there and that we continue to emphasize is the potential impact it could have on a future immigration status. So tax is really one of the easiest things to check whether someone was tax compliant or whether they were not. We would hate to see tax being something that would prevent anyone from staying or returning to the US in the future on a different visa or applying for a change of status, longer term visas, US citizenship. We don't know what the future will hold. We actually had a client reach out this week needing to backfile from over 20 years ago because they were going for the US citizenship for their daughter, and they needed their tax forms from like 2003, I think it was. So you never know when it could come up for them. So emphasizing the importance, it's tax compliance is the key message here. We do see a lot of the time they think of it as the tax refund process, which it's great if they get a refund, but it's more so they're required to file a tax return by law. Then on top of that, fines, penalties, and interest can build up if the IRS are owed money, and they will impose those until they're paid. And then they might also be missing out on a tax refund. So the IRS won't be reaching out saying, this amount is owed to you. They'll need to file a compliant tax return to claim that back. Then just mention being careful about options that are being recommended to J1s. I've mentioned TurboTax. We see this as one of the most common errors for certain cohorts of J1s, where they'll hear from their friends that they filed using TurboTax and they got a large refund and it was great. But TurboTax only support with resident tax returns. So the reason they're getting a refund on the likes of TurboTax is because they're claiming exemptions and credits that they're not entitled to as a non-resident. So if they're a non-resident for tax purposes, they cannot file using TurboTax or other resident providers. And then we do see a lot of like social media groups, like Facebook groups and things like that are pretty big for the J1 communities. And we do see situations in there where people are maybe recommending resident softwares and also recommending like tax professionals who can get you the maximum refund, for example. So just to make sure your J1s are educated in terms of like how they can actually file forms they should be filing versus shouldn't be filing, and making sure they're doing their due diligence before filing their taxes. Then lastly, then before I go to Q&A, some Sprint tax solutions. So we are a tax non-resident tax compliance provider. So we have a multitude of softwares that can support, one of which is at its peak right now, is Sprint Tax Returns. So that supports non-residents with their tax filing requirements. So depending on their circumstances, could be a federal return, state return, Form 8843. If they had FICA withheld incorrectly, we can help with a FICA return. If they filed incorrectly, we can help with amended returns. If they need a NITIN, we can generate the W7. So that essentially we help about 300,000 non-residents every year with their tax filing requirements. So if you do have non-residents who need support, we still have a month to the deadline. We'd be happy to support them as well. Sprint Tax Calculus then is a separate system. It's more so helping the likes of employers or universities or institutions who make payments to foreign nationals. So it's helping you with determining tax withholding, determining residency for tax purposes, tax treaty eligibility, generating pre-withholding tax forms like the W4, for example, or other treaty forms. Also, if someone had a like 1042-S reporting requirement, which kind of covers payments that are made to foreign nationals outside of what goes on a W2, it would handle that and lots of other reporting capabilities. So we do work with some employers as well as the likes of like camps or sponsors who make payments to foreign nationals to help them figure out tax withholding and essentially making sure they're taxing their employees correctly. And then Sprint Tax Forms is almost like an open-ended version of Sprint Tax Calculus, where, admins and say the employer doesn't directly have access to an account, but your employees could go through and generate their residency determination, FICA exemption, tax treaty eligibility, and other kind of pre-withholding tax forms or employment forms to help make sure they're taxed correctly on their income, which they can relay to the employer directly. Then some other available support. We have an extensive YouTube channel with everything from like recordings of our webinars to step by step of the Sprint tax process. So individuals, whether it's individuals on today's sessions or employees directly or J1s directly, they can check it out. We have blog content for tax awareness. We do have 24/7 live chat during tax filing season. So if anyone has questions going through the tax filing process, our support team would be there for them as well. And then we do have tax workshops and webinars. So we have a wide variety of types of sessions that we host. We host sessions like this for hosts, agents, sponsors. We also have a free open webinar schedule for J1s themselves. So that's kind of been taking place since December and they'll go right up till the April deadline. So if there's anyone who would like access to those free open webinar schedules to share with your J1s, more than happy to share those as well. Then some Sprint tax stats. I mentioned some of these, but you'll kind of see the wide variety in terms of those that are due a refund versus those that owe taxes depending on their visa status. So if we take the case of an au pair, we see about 95% of them owe because tax is not being withheld at source. Camp counselors and summer work travels then tend to owe in many situations because the inappropriate, not the appropriate amount of tax is being withheld, basically. So in a lot of cases, it's because employers are allowing them to claim the standard deduction, which leads to them needing to pay taxes when they owe money. And then the likes of like interns, slightly lower, professors, lecturers, teachers tends to be lower again. So there is a wide variety in terms of those that are due a refund versus those that owe. And as I mentioned, a lot of J1s think of tax filing as tax refund. We're kind of trying to change that slightly to think of it, it's tax return. They need to file their tax return to be in compliance. And if they owe money, it's simply because like that should have been withheld last year. It's not a choice necessarily for them to pay it. If they owe it, they have to pay it. If they don't, the IRS will start to issue notices with interest and things like that. But with that said, that kind of covers the information from my side. Happy to jump in and address any questions that anyone might have.
Thank you, Anna. That we covered a lot of ground in a short period
Yeah.
of time, so I'm really grateful for that. Friends, I do invite you, if you have questions, raise your hand, put them in the chat. While you're thinking and typing, Anna, one quick clarification. You mentioned the number of days in the calculation for residency,
Mhm.
with the example that if a winter student started in December, that first year would count, and then the second year would be the continuation of
Yep.
their summer work travel program. If students do multiple years, does it compound and add all together, or does each time they come on a new summer work travel program, does the clock reset?
So it doesn't reset each time they come on a new summer work travel. So like if they came for the 2025 end of season into 2026 winter season, like 2025 would be one calendar year of non-resident status, 2026 would be the second year. And then if they came back going into 2027, that's when their days would start counting towards that residency test. If they're here on like a winter work travel or summer work travel, it's probably unlikely that their days of presence in the US will actually meet the substantial presence test, only if they spend like a significant period of time. We probably see more like interns, trainees when they're staying for like the whole year that they may become a resident for tax purposes at that point. The only time it kind of resets is they're given two calendars of non-resident status in the last six preceding the current year. So like if the first year of non-resident status like falls out of that last 6 year period, then they would get another year of non-resident status. So it can be a little bit complex for them to figure out. So like on both the Sprint Tax returns and the Sprint Tax form system, the residency step on that is free of charge. So if they want to just check, like I'm not too sure, I've been here many times, or they could have been here as a high school student in the past, like that all counts. So it's kind of a full picture, which sometimes slips through the cracks for employers as well. They'll just be asking them, what are you on now? And okay, great. But actually, if they were here previously, that all needs to be taken into consideration as well.
It's a good heads up for the for our employers on the call as well.
Yeah.
Friends, I know you have many different roles, things you're thinking about from your points of view as sending agents, employers, chambers. All right, so you're just gonna have to listen to me some more. That's
Yeah.
unfortunate. Um, Many of our colleagues on the line do orientations at different steps as the students are getting ready to leave, as soon as they've arrived in the US. Are there key things that they should be including in their orientation materials that maybe they aren't yet or haven't thought or would be best practice for them to start briefing students on or J1s on before they leave and before and as they arrive?
Yeah, like we have a kind of a standard pre-orientation slide deck that I'd be more than happy to share with people. But first part is probably like preparing them for taxation from an employment perspective. So like what taxes they should be expecting to be paying versus like what taxes they shouldn't. So they should expect to see federal, depending on the state, they should maybe see state, whereas they shouldn't be paying Social Security and Medicare if they're a non-resident. So a lot, all of obviously all of this is really new information to them all. So making sure they know what they should or shouldn't be paying. Um, and then also like something on what they will need to do when they earn income and how they need to file. So there's kind of the two sides of the coin, preparing them for employment versus, them needing to file a tax return. And like we host pre-orientations that are free and open to all. We do exclusive ones for partners. We've done some in person as well, like across Latin American regions, other areas of Europe and stuff like that. So we're more than happy to help, whether even provide a 5 minute video, like depending on how hands-on or hands-off you want us to be, like we can definitely provide resources that can help.
That's amazing. Thank you. We have a couple of great questions in the chat. The first one is whether you have instructions or advice for employers and participants on completing the W-4 for J1's interns, trainees, and summer work travel.
Yeah, so like we don't necessarily advise on how to complete it. Like the main consideration for non-residents is they need to complete it in the manner of a non-resident alien. One key part of that is if they're a non-resident for tax purposes, they need to put N or A for non-resident alien under Section 4C, which should essentially dictate to the employer that this person is a non-resident and we need to withhold from the very first dollar. And typically they're filing it as like single or married filing separately because they're not able to file jointly. And like that Sprint tax form system that I mentioned does have the option to generate a W-4 for a non-resident or a J1 specifically as well. But
That's
that's
great.
the NRA piece is something that definitely slips through the cracks. And they like some payroll providers that you're using, some will have an option to indicate that they're a non-resident. If it's a resident or a US citizen heavy provider, like they might not have that. So just to make sure that if something needs to be handled differently for your J1s, that that is being done because it will impact them owing on their return as well.
Great advice. Do partner agencies provide tax assistance to the students typically, or is that something the J1s typically need to handle on their own?
Yeah, so it's a good question. I'd say they don't necessarily provide tax assistance, but they provide resources for taxes. So, like the agencies that we work with, for example, we will work directly with them and we will send them communications that they can send to their participants. We'll send them our free webinars, we'll send them our blog, and essentially everything that we have. And they'll communicate that information with the participants, but they kind of say like this is the information that we have from Sprintax or whoever you're, using as a provider, and it's kind of hands off from there. But we do see obviously the more communications they get, whether it's from sponsors, agents, hosts, the higher the level of tax compliance. Like there is some level of responsibility across all of us to make sure that they are educated in terms of their tax filing requirements. And we know that they lean on the agents and the sponsors a lot. Like a lot of times they lean on the agents, given that you might meet them in person and stuff like that. So definitely giving them information would be helpful.
A great charge to all of us that we gotta all of our parts have to pull together to make sure the participants do what they need to do. And a great ending note as well. And if people have further questions, I put the link to the Sprintax blog, but is there a great source for recommending more content or even if you're willing to share your information with our
Yeah,
attendees?
I can write my email into the chat here, and I'm happy if anyone wants to email me. Like we can um send you like any information. As I mentioned, we have like tons and tons of information. We have like a partners communications kit, which I can actually just share. Let me just stop sharing my screen there for a sec. Um,
And while she's doing that, I'm going to put in a quick commercial. Capital has a number of great programs coming up. So while she's searching, I hope those of you who work on the high school program will join us on March 31st. We're going to have a great conversation, particularly between recruiting agents and sponsors, to think about how folks can work more effectively together that way. In April, we'll have a similar conversation, particularly looking at summer work travel and how that and all those parts of that chain can work together effectively. We'll be in Wilmington, North Carolina for an in-person workshop in May. We'll be in Pigeon Forge, Tennessee in July, and then lots of other great content and resources for Capital members through the member portal. So she had a chance to get it up. So there we go. You have all that now in the chat. And I want to thank all of you for being here. This is such a key part of the conversation and can really make the participants' experience so much smoother and make your lives so much smoother. So thank you, Anna, for the great wisdom that you've shared. As she said, slides will be available for members through the member portal as soon as I can get them up there. And we'll have this recording for all of you on our YouTube page soon. I have a very quick poll that I'm going to invite all of you to please just let us know how we did. And we really hope we'll see you at future Capital webinars so that we can keep our space growing and getting stronger. So thanks, Anna. Thanks to all of you for being here. please, hopefully you can see that poll. There it is. It's starting to come in. And we will be of service to all of you as best we can from here on out. Thanks, everybody.
Thanks, Carmen, and thanks everyone again for joining.